private, no government oversight, digital, rules-based monetary system the world has ever known. That's a big idea. We were in Nvidia, have been, still are in the more specialized portfolio at a lower percentage. We're on to the next big beneficiaries of artificial intelligence. I think what we're seeing, certain breakthroughs in AI itself are taking Tesla closer to its goal with proprietary data and domain expertise in their own business, as well as AI expertise, can become more competitive in its own industries. We think the bigger risk out there is not inflation, it is deflation.
Hi, my name is Jason Raznick, the CEO of Benzinga, and welcome to the Raz Report. As always, before we kick things off, I want to quickly tell you about what Benzinga is. Before I started Benzinga in 2010, there were very few places to get real-time information on financial markets. I thought it was unfair that Wall Street had access to this information before the average Joe investor. So I created Benzinga to level the playing field for you, the retail investor. Benzinga is for the people and by the people. Now, let's dive into the show. All right, very excited to bring back a past guest onto the Raz Report. We have none other than ARK Invest Cathie Wood. You know her analysis, her data, her team's research. She has grown her firm. This was 2-3 years ago. Back then, I was a lot less gray hair. Interest rates were a lot lower. Growth stocks were growing faster. Interest rates are a lot higher. Growth stocks are growing slower, it seems like. I have more gray hair. Cathie, welcome to the Raz Report.
Thank you, Jason. I'm happy to be with you again.
Thank you. Thank you for coming on again. We appreciate it. We had a lot of fans last time, and I got thousands of questions sent to me again this time. We're going to do our best to try to get 20 questions in. We'll see. Has your overall strategy changed, Cathie, with these higher interest rates that we're in right now? And I'm jumping right into it. We're not doing the whole intro stuff.
Oh, yeah. So we have a very strong point of view about what's going to happen to interest rates. We think they're going to fall. And surprisingly so, because we think the bigger risk out there is not inflation, it is deflation. And you can tell me, oh, these economic statistics are saying the economy is fine. You take a look at some of these earnings reports and the headline will be, oh, they beat their revenue and earnings. But what happens if you look deep into it? The guidance has been falling for a long time, and many companies are showing little to no nominal growth. So forget about inflation. Nominal revenue growth is diminishing. And by some measures, real revenue growth has been negative in units terms for the last 2 quarters on a year-over-year basis.
So do you think then, like some people are skeptical on the economy, what it's going to do? Do you think people are right to be skeptical? Because so far, the government's looking at inflation. They still see inflation. Do you think the government's wrong on that, or where are we at on that?
Well, I think we've dropped inflation from 9% in June of 22 to 3%, a little over 3% headline CPI in July of this year. So it's coming down, and money growth is negative on a year-over-year basis, down more than 3%. It's been negative since the beginning of the year. And monetary policy operates on the economy with a lag. So we actually think there's going to be a harder landing than most people think. And certainly when it comes to profit margins, now that all of these companies are agreeing to these huge wage bills.
Yeah, and so then deflation to you, does that happen on statistical numbers from the government, or is that stuff that you guys see in your own data?
I think it ultimately will happen to the government numbers. There's big lag there. There's a good story from Domino's, the CEO of Domino's Pizza. He said, we made a bad mistake in trying to raise prices. We're rolling them back. We lost units. We're rolling them back now. And I think I think the consumer is saying, no more. We can't take it. Savings are running down. Student loans are coming back. And companies are going to rethink their strategy. To see P&G and Pepsi, near double-digit price increases and negative units. Well, these are manufacturing companies. That kills productivity, and it becomes a vicious cycle.
Got it. So then when you, because one of the things that I see, like credit card debt, they say is the highest it's ever been. But is it the highest ever been in terms of like the whole market, or is it low versus that? Or like, is that a big concern, credit card debt for you, for your ARK's team?
Well, credit card debt is not a problem until delinquencies start ramping. And delinquencies ramp when unemployment goes up. And we do think unemployment is going to go up as companies watch their margins going down. They've held up because they've priced to keep their margins up. They've put in through higher prices, but now they're losing unit growth. We just got a report today about consumer delinquencies ramping much faster than some company had expected. It was a retailer, I believe. I think this is going to become pretty rampant.
Okay, got it, got it. All right, now we're switching to AI. I know you were a fan of AI before anyone talked about Chat GPT. So, like, again, you you don't get credit sometimes where credit's due, and then like we'll talk about Tesla later, but then everyone talks about AI, and it's like, okay, so then they're like, oh, she sold this stock too quickly. Where
Nvidia, yeah, yeah.
Yeah, Nvidia. Do you think
Mm-hmm.
it's too late for investors to get into AI stocks?
No, but I think every stock could become an AI stock because and that's a bit of an exaggeration. Commodity stocks won't, but any company with proprietary data and domain expertise in their own business, as well as AI expertise, learning how to harness that data and combine it with foundation models, can become more competitive in its own industry. So, we for every dollar in hardware that artificial intelligence causes to be spent, there will be somewhere between $8 and $21 in software. Twilio is having its AI day today called Signal, and it's talking about all of the ways it is harnessing AI. It had Sam Altman on the uh, during the day,
Stage.
yeah, on the stage, and so Twilio has more than 1 trillion engagements between consumers and businesses recorded every year and growing. So it has data, and it's all about marketing. How can we use this data to market to this individual more effectively, which is what companies want. So they want the Twilio to have access to this data so that they can help them.
Is Twilio one of the positions you guys been building up?
Yes, we have. It is just to give you a sense of the drama here. Nvidia is selling at about 25 times this year's revenue. Okay, 25. Twilio is selling at 2.5 times this year's revenue. It's a software company with margins that are going to rise as it integrates more AI into its businesses. So,
And
absolutely.
Twilio is profitable, right?
It is just moving into cash flow profitability, surprising analysts. The market's actually demanded that most of our companies move much closer to profitability than they were a couple of years ago. So that's what they've done. And now they've got AI as a tailwind. So we think it's going to be a fabulous story.
And I actually think if Twilio wanted to be a lot more profitable, it could be by cutting
Yeah.
R&D expenses. Twilio founder Jeff Lawson is a fellow middle school, high school classmate of mine. He was 1 year older, and his mom was my math tutor. When I didn't study for the math test, I'd go to Jeff's house and get my calculus tutor the day before. But Jeff
Oh,
Lawson is from Michigan as well. So yes, he's
great.
amazing CEO. Have you met him yet? Or have you talked to him?
Yes, oh yes, yes. And it was very interesting to see his transformation. I think he thought early on that AI was going to be, building out AI models was going to be way too expensive, that they'd have to leverage off of others. Now, the AI training costs are dropping 70% per year. So now he is harnessing AI in an aggressive way, which we think is really important. You need a visionary leader, proprietary data, domain expertise, and AI expertise to harness this data.
And I'll tell you, he was a visionary leader. Way back in college, started a company, Versity. It was note taking for college classes. Way before anyone ever talked about it, he was always on the cutting edge. So you have a good leader in him. Okay, so and I'm friends with that. So he's on the phone. I'll text him after and said we talked about him and send him the clip. But
He's doing a good job on Signal today. I watched his interview with Sam Altman.
all right, I'll tell him that. I'll relay that. So in a report from you guys, you laid out an investment case for UiPath and Twilio's good AI investments with lower price to sales. We talked about Twilio. What about UiPath?
So UiPath is in the robotic process automation space. And I remember when it went public, I thought, wow, he's right. He's able to bring together individuals from different companies who are business process oriented and trying to help make their companies more efficient. And they compared best practices. UiPath put these best practices to work and now is building foundation models and other models to help companies with their workflows. This is the boring stuff. It's the administrative stuff, but it makes a huge difference. By our calculations, knowledge workers are paid $32 trillion around the world. We think that could be cut in half because of efficiencies in those specific jobs. Technology is a net job creator. There will be other new jobs created that we cannot even imagine now, thanks to artificial intelligence.
Yeah, it is truly unbelievable. I mean, I hate to see how many more emails you're probably receiving from people that are, trying to get a job with you, but you don't know if they're using AI to do it. Because back in my day, when I had to write a letter to try to get a job at a hedge fund, I would spend few hours. Right? I remember Bill Ackman.
Every word. Oh, how is this going to sound? Yes, I remember.
And you did the same thing. So we in our last interview, which you can go check on the Raz Report, we talked about how Cathie got her start. So I usually go to there, but we have that, and every word, those emails now, Cathie. I don't know how you know if it's AI or not, right?
Yeah, I think that many of them seem like form letters, and we kind of recognize form letters. We're doing an interesting thing with ChatGPT. Our analysts, I think we need a certain voice, and we need to speak to the young, from the youngest investors to the most seasoned investors. So there's a certain voice we have when it comes to editing, and all of our analysts are now writing with saying something like, "Okay, please translate this." ChatGPT into grammar and a writing style like Cathie Wood. That's a bit of an exaggeration, but it's working because I won't let anything go up on our site unless I edit it. The important blogs. I'm talking more about on the research side. And so it's a big help to us in terms of making very difficult concepts clearer. ChatGPT is very good at doing that.
100%. And then there's all these other ones that do a little version of it. We use a different one, and it's pretty good on the editorial side. I'll share that with you off the line.
Okay.
I think you'll like it. Yes, we've tested. We had a whole team test it, and there's another one, but I'll share with you offline because it was a decent amount of research. Okay. All right. So I'll follow up with you on email or text on that. All right. So we're going to move on to Tesla for a second. So Cathie Wood predicted that Tesla would reach a market cap of $500 billion by 2024, but it actually achieved that milestone in 2020 and surpassed $700 billion in 2021. One of the biggest catalysts I know that you see for Tesla is FSD. Before that, we get the highly anticipated Cybertruck, which I would love to be in line for. Elon, if you're listening, can you get me in the front of that line somehow? Okay, but anyway. How big of a catalyst do you think Cybertruck is for Tesla?
Well, we think Cybertruck is going to expand the truck market. Just like the Model 3 has expanded its category. You see in the Model 3, you've seen people who they've stretched to buy that car because it's such a good car. Now, it will be interesting. The F-150 Lightning, the Ford electric truck, seems to be preferred by people within the Midwest. But you see that GM and Ford are both signing on to Tesla's charging network. We think that the middle of the country, which has not really embraced Tesla's cars, is probably going to be much more amenable when there are chargers much closer by. And I'll bet the same thing happens with the Cybertruck, especially we're hearing a lot of funny stories about, they're funny, but they are also very, I'm sure for the people experiencing, I heard one story, an F-150 Lightning truck owner driving his family on a long distance. He said, we were hungry, afraid, and heartbroken because there were no charging stations. And so we think that's a big deal when it comes to the middle America adopting any EV, but a Cybertruck.
Yeah, that is a huge deal. So then my question to you is, with these other companies adopting Tesla's charging network, does fast charging then work for those companies, and it doesn't help Tesla as a differentiator as much? Or are they getting a lot of royalties for them using their things? I don't know those.
They're probably getting a lot of information. This is an information network as well, and so about cars coming and going. So I think I'm not sure what the licensing deals are like. We don't know, but we do know that Tesla will get a lot of information, which is really important in this digital age.
So, going like, what are the implications? Supposedly, the automated driving is coming out. The word beta, FSD update version 12, will no longer be called beta. I don't know if you saw that, but if you did, implications of this.
Yes, well, if you receive the last software upgrade, you'll see how much full self-driving has improved, FSD has improved. And so I think what we're seeing, certain breakthroughs in AI itself, artificial intelligence, are taking Tesla closer to its goal than I think many people expected. Of course, Elon expected it 3 years ago, and we're learning only now that he needed large language models to accomplish this last mile, so to speak. Yeah, I think it's going to be pretty much there, and we already know from the data that they're providing that driving in a Tesla car with FSD as it is right now and all of the other safety features causes accidents once every 3.2 million miles. And so if you compare that to Tesla's pre-FSD, that is a 5 times improvement. And that also compares to 500,000 for the average car out there. So 6 times better than the average, 6 times safer than the average car out there.
It's unbelievable.
Yeah.
I know you. I think you had a Model 3 when we met in person. I don't know if you remember, here in Detroit. I had a Tesla, and I was going to drive you guys to the airport. And so I had one early, and now I have a different electric car, which is like a premium brand. But I am in the process of getting a different S and selling that premium brand electric car that I bought, at a high of the market. But because of some of the safety features that Tesla offers, and just other things like making it so easy to put air conditioning in your car before you get in the car versus having to do it with other things that are just not as easy.
Yes.
It's amazing. The thing that I want to see with Tesla is some sort of like network effect, where the cars somehow, the more cars, the more network effects. And I know that taxi system is one of those things. Is the taxi system still one of your big catalysts for the stock eventually?
Absolutely. And we think, we see cruise automation. It took cruise automation 9 years to get San Francisco right. And now people are, of course, concerned that it didn't get it right, given some of the accidents we've seen recently. So that was 9 years. Then, but it only took them 3 months, so 90 days, to figure Austin out. And now I think, if I'm not mistaken, it's gone to either Charlotte or Charleston. So it is now starting to make its way throughout the country. And I kind of like that. I'm sure it's motivating Elon even more. We do know recently that they put up a job description for someone who might start them out in the ride hailing space with passengers. So getting the network started city by city. So we'll see what pans out here. They said they wouldn't do that, but apparently there was a job description recently. So we know they're thinking, how do we go national, and how do we do this big and all at once?
Yeah, no, absolutely. So two more questions just on Tesla. What do you this Chinese thing? Tesla slashing prices in China. Is there increased, competition? How does the China thing work out for Tesla?
Yeah, well, we know that that Tesla cuts prices because it can. It is riding down a learning curve, and according to Wright's law, this is drivetrain technology, Tesla style. For every cumulative doubling in the number of units produced, costs decline 28%. And of course, as they move to different chemistries like lithium iron phosphate, um, those costs drop even more dramatically. And they're doing that in China. So I think they're catering to that market. It is weakening as a market. There is more competition, and I think they're pretty confident though about their positioning, because if you've seen the other Chinese manufacturers, except for BYD, they have really hit the skids. Now, we're seeing some better numbers in here, but Tesla seems to be the preferred vehicle, along with BYD. BYD, many of its vehicles are less expensive. So
Okay. And you guys, when we're talking to Cathie about Tesla, this is someone that lives, breathes, you know, looks at Tesla like none of us. I mean, some of us probably do. But before we went on the air, I was talking about Logan and Jake Paul. She never heard of them, which I just find amazing because it just shows focus in the sense of she focuses on what she studies. She has, Archer Innovation, all these different plays that have been successful and ahead of the game and looking at the future before the future comes. I mean, that's what Cathie does. And when I was talking about a pop culture thing, she didn't know. And I just find that awesome because it just shows you how deep you go. Like Logan and Jake Paul, and there was something else. I'm like, and I felt, and it's just, but it shows you're not wasting your time looking at, like, I don't know, TMZ.
yeah, well, thank you for letting me off the hook. And it really is, yes, we eat, breathe, drink, our research on all kinds of companies, and it is us. It's our analysts. In the case of Tesla, Tasha Keeney, especially on the autonomous side, and Sam Corris on the electric vehicle side, have been amazing in helping us surface how important this company was going to become, as well as Brett Winton, our chief futurist. So, got to give them all due credit.
So the last question on Tesla is from one of our writers, Chris Kaji. He said, how should investors think of Tesla when thinking evaluation with electric vehicles, energy storage, solar, autonomous, robots, and much more? Why should it trade more like a tech stock than an auto stock? Thank you, Chris, for that question.
Well, so he's suggesting it should trade like a tech stock.
He's saying with
Yes.
they have electric vehicles, energy storage, solar, autonomous robots, and much more. Some people, maybe bears in the market, think it should trade more like an auto
No,
stock, and he
that's why
thinks
they're getting it wrong. That's why they're getting it wrong. So go back to our AI conversation just a little while ago. We believe that autonomous taxi platforms are the biggest AI project in the world. And
okay.
we believe that Tesla, because of its positioning with AI, it is the only auto company or tech company that has designed its own chip for autonomous driving. It has taken a leaf from Apple's book. Apple redefined the cell phone market by designing a chip that turned the cell phone into a computer. And look where Motorola, Nokia, Ericsson, BlackBerry are today. They didn't define the market correctly, and neither have auto companies. This is not an auto play. This is an autonomous taxi platform play with software as a service like margins, which means on that part of the business, the autonomous, those are 80% plus gross margins. And anyone following Tesla now knows that its margins are in the 20s, normalized, when it's not cutting prices dramatically in order to compensate for a weak environment.
Can't you get Elon to cut the price of the Plaid just a little? He introduced that standard Tesla 10,000 lower. Cut the Plaid. I mean, they don't. He shouldn't have to, because it goes faster than any $300,000 Ferrari or Lamborghini. I mean, it's unbelievable.
Yes.
1.99 seconds.
Yes, there's a story. I have a story there. One of my dear friends' sons got a Model 3. Something went wrong with the Model 3. So he tried, for some reason, he got a Plaid. This is a guy in college. And it is, I mean, he wants to, he loves it in a sense, but it's also scary. It's also scary. It's a race car. And, you know, I think that was a big mistake, but it's unbelievable.
Well, if he wants to, I'll get the Plaid. He can. We can do an exchange. It'll happen. But yeah, just connect us. I'll connect you on that other thing. Okay, Archer Innovation. This guy Piero's one of your. It's up 290% this year, but it's a really small holding in your fund. Are you guys planning to increase exposure to the air taxi industry?
Yes, yes. We think the air taxi industry is almost here, thanks to, and it's the same things we were just talking about. It's battery technology, artificial intelligence, and we have another consideration: regulation, as do autonomous taxi platforms. So, yeah, we started buying ARKK. Truth be told, we wrote it all the way down, and we kept buying it. Now this is in ARKK, which is our autonomous technology and robotics fund, and so you can see that, and we're now writing it up, and we put it into our flagship fund. Just 50 basis points as they were doing the most recent deal. And then they announced that they had settled with Boeing. And not only had they settled with Boeing, there was a nasty lawsuit going on over there about patents. But Boeing has taken an ownership position in Archer, and Archer has two other partners, United Airlines and Stellantis. So Stellantis is thinking about autonomous mobility. Stellantis, as you know, owns Chrysler, an Italian company that bought Chrysler. So it seems to us that Stellantis, more than the other auto manufacturers, is thinking about mobility in another way, or in an expanded way, and that is this autonomous taxi. I mean, eVTOL, air taxi. So we're pretty excited about that, because those are deep pockets, and this is a high fixed cost business longer term. So we think there's going to be some nice scaling with those partners.
Okay, so like you could be making, more purchases of that industry. That's
yes. Well, in ARKQ, we also own Joby.
okay.
So, yes.
Okay, so that's another one. Okay, and then I didn't ask this, but I know last time you had to sell Tesla shares back when the stock was going crazy because it was the weighting in your portfolio. Some people wrote in, I see ARK selling some Tesla shares. Does that have anything to do with your prediction on the price of the stock, or balancing, or any answer to that?
So we are in print. Our price target for 2027 is 2000. That's what we're in print on. But our confidence in autonomous has gone up. So you can conclude what you want with that. So that 2000 compared to I guess we're around 250 now, in and around 250. Our confidence is pretty high on that, increasingly so since we've seen the software upgrades, how provocatively they have improved FSD. No, not at all because of the price target. When we move into a situation, take Archer, and to be honest, I can't remember exactly if we use some Tesla for it, but this is in the autonomous mobility space as well. Our compound annual rate of return expectation for Archer is actually higher than that for Tesla. And as you can tell, for Tesla, it's pretty high. But Archer is also much more speculative. It's much earlier stage. Nonetheless, when we get an opportunity and see significant liquidity, we'll source liquidity from another stock that has had a good run itself.
Got it. So that's like fine. I get it. It's what you do as a portfolio manager, and what's beautiful about what you do is the transparency. And with transparency come more questions, which I guess a double-edged sword for you, right? I don't know how you handle that. If you respond to people on Twitter, how do you look at that?
Well, we tend not to. We think if people watch closely what we do over time, they will see that ARK is a liquidity provider. Unlike a lot of other institutions, there are a lot of asset managers that are momentum driven. In fact, it's part of their scoring system. If the price is going up, if the revenue growth is accelerating, buy. Now that's a feature that a lot of portfolio managers use. We're the opposite. If we see one of our stocks up 20, 30, 50, 100, 200% in a short period of time, we will take profits. It's clearly the momentum buyers want it. They're willing to pay up dramatically. And at the same time, there are probably other stocks in our portfolio that are suffering some short-term setbacks. And we think both of those are short-term moves because there is a lot of volatility, as you can tell, in our portfolios. So we're very opportunistic in terms of providing liquidity when buyers want it, and we are also buyers when others want liquidity.
So is that one of the reasons you sold Nvidia when you did? I know in the market they just want to say, "Oh, she sold it," but you were early in Nvidia. But like, how do you look back on that? I guess.
Yeah, we bought Nvidia when we started ARK's funds in 2014 at roughly $5, and I remember in 2015, Tasha Keeney came into our brainstorm and said, and now this is when PCs were falling. They were dropping at a double-digit rate. Nvidia back then was nothing but a PC gaming chip company. Tasha comes into our brainstorm, says, it seems like the brains or the central nervous system of an autonomous vehicle is going to be a GPU. I said, you are kidding. I said, nobody knows that. And with that and a further study of how important GPUs were going to become to artificial intelligence, it became one of the top stocks in many of our portfolios, including our genomics portfolio. And so if you look at our flagship portfolio, since 2014, Nvidia is the fourth largest returning stock. So top is Tesla, then GBTC, then Invitae, a genomic stock, and then Nvidia. So we were there, and we own it in our specialized portfolios still. But 25 times revenue for Nvidia, which is mostly in the hardware space. I know they're trying to get into software, and I hope they do. We do own it in other portfolios, but I also know that the hype around AI is a recipe for an inventory glut at some point. I don't know if it's going to happen a year from now, or a quarter from now, or 2 years from now. But I also know that the Twilios at 2.5 times revenue, UiPath at 6 or 7 times revenue. And that's on this year's revenue. The recent paper we wrote, which is an AI paper, it's on our ARK-fund site, shows trailing 12 months. So I'm focused more on current year multiple of revenues, and Tesla at 6 to 7 times. These are AI projects. And as I mentioned before, these are software projects, not so much hardware. And the software pull through from AI hardware is going to be somewhere in the 8 to 20 times range. So it's going to be a much bigger market. So whereas we were in Nvidia, have been, still are in the more specialized portfolio at a lower percentage because we are paying attention to valuation. We're on to the next big beneficiaries of artificial intelligence.
And that you're early, and some other people are late, and you could take advantage. But the markets are irrational, so it's like part of it is like, do you hang on longer because then people catch on, and then you'll make more money? I mean, do you factor that in?
You know, in a very unhealthy market, what tends to happen is the market narrows, and a lot of people have been concerned that the Magnificent Seven have taken so much oxygen out of the room in terms of this year's rally. What gratified us in the first 6 months of the year is, despite not owning any of the Magnificent Seven except for Tesla, we outperformed even the Qs. And we owned a slight bit of Meta, but a partial position. That tells us that the bull market in innovation is broadening out. And that's a healthy development for innovation. As for the rest of the market, I don't know. I think there's going to be a lot of disruption and dislocation in the traditional world order because of innovation. So I'm happy to see innovation is broadening out in terms of the market rewarding it. We'll see if that happens for the market as a whole, for the broad-based indices.
Okay, we're going to do like a rapid fire, but before we do, we have, again, Cathie Wood, ARK Invest, on the Raz Report. In November, if you're listening, come to Benzinga FinTech Deal Day or the Future of Digital Assets. If you're listening in today, we have awesome people. It's a great lineup, but we're going to do a little rapid fire because we only have a few more minutes with the awesome Cathie Wood, who you guys, she's in the media, she is out there, and you're going to get people loving you, people not liking you, and saying, oh, this, that. And what I like is you march to your drummer and you do your thing, and your Nvidia example is unbelievable. And what people say, oh, well, she sold right before you bought it at $5. It's funny to me. It's funny to me. Like if you had a crystal ball, a prescient crystal ball, and you knew this was the high today, then I like.
but what did we do? I know one of the stocks we bought with some of the Nvidia was Coinbase. Coinbase has tripled.
Right. Exactly. There you go. So what did you, that's the thing. It's money allocation. What did you it's not like you bought Nvidia. What'd you say?
Portfolio management. That's what we do. And nearly 100 bagger. Well, let's just be more conservative, say 80-fold increase in Nvidia. Not bad.
I mean, there's not one person on this planet that wouldn't take that. Okay. Not one person. So exactly. All right. Before we go to our little quick rapid fire, anything that isn't out there that we could break on the Raz Report? Won't publish today, but in a couple of days, but anything that you got that no one, it's our second time, you go on that other channel a lot more, but it's okay.
Give me a clue as to what could that be?
Crypto. It could be something on Tesla. I don't know. You have stuff in that brain just somewhere. You just pull it out. It's like the brain just.
In terms of well, we're in the news for our Bitcoin ETF filing, and because it's with the SEC, we cannot say anything. But I really do believe that the SEC is going to lose the grayscale case, and that's going to happen pretty soon. And that one of the ways that the SEC could respond is to turn around and change the subject and approve not just one Bitcoin ETF, but a lot of the ones that are on the docket right now. So it could happen. It could happen quickly. And, I think from an institutional point of view, then, I think we're going to see a serious move in. And what's interesting about that is the number of Bitcoin outstanding now is 19-ish million, and the maximum will be 21 million. If institutions want to move in, that's going to be a lot of incremental demand for not that much more incremental supply. So the only way to then do that is to bid the price up if they really want to be a part of
So,
that move.
and we're going to do a couple of minutes over, but your Bitcoin prediction at one point is $1 million a coin. Are you still a big believer in Bitcoin?
Yes, 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 absolutely, absolutely. Ever more so. First, global, uh, private, no government oversight, digital, rules based monetary system the world has ever known. That's a big idea. And we think the total crypto asset market in 2030 will be valued at roughly $25 trillion Right now, it's a little over $1 trillion. And we think that Bitcoin is going to be more than half of that.
Do you have a prediction for this year or next year, 2024?
We tend to be 5 years in our predictions. So the 5 to 7 year forecast is in base case would be 650,000, and then
Okay.
bull case would be about double that.
And you believe in crypto, Bitcoin so much because like one of the problems is a lot of those brokerages that you could buy Bitcoin through, Voyager, a few others went bankrupt, FTX, etc. How do people buy? How does the regular person buy Bitcoin, or is it you think that institutions are going to be the ones buying this Bitcoin stuff? And I ask because our whole digital asset day is all about this.
Yeah, I think institutions will be a big part of it. This is a new asset class, very low correlations with any other asset class, except at extremes in all markets. The correlations go to one. So yes, and I think a Bitcoin ETF approval will help. I think judicial clarity, legislative clarity is all going to happen within the next few years. This is an election year issue. I already know some young people who have switched their allegiance when it seemed like Elizabeth Warren was going to lead the Democrats into the anti-crypto world. I know of some young individuals whom I never thought would change their allegiance, shifted from Democrats to Republicans. Now it's becoming a little more bipartisan in the legislative branch, and I think it is because it's becoming an election year issue. And so you can't be on the wrong side of young people and win an election.
Yeah, that is awesome. So, just two last questions. So, Coinbase is still one of your largest holdings in the crypto space.
Yes.
You
Yes.
believe in Coinbase still, like big
Oh,
time?
yes. Yes, absolutely. We think it's going to be the institutional on ramp. It signed the deal with BlackRock, and I think that was a very big deal in terms of
Okay.
Larry Fink. Larry Fink is now all about Bitcoin, and so it's getting much more institutional focus. You will remember there was a time when Larry Fink said Bitcoin is environmentally a menace. Uh, and I don't think he's talking about that anymore, because actually Bitcoin is solving some environmental problems now that Exxon is putting Bitcoin mining machines into natural gas fields so that instead of flaring the natural gas, it can be used to mint Bitcoin. So and utility ecosystems are using it to in their solar ecosystems. When the sun's created too much energy, it'll pour into Bitcoin mining, and they can overbuild solar and wind. So this is the convergence of technologies.
No, that's awesome. We'll be discussing the Benzinga Future of Digital Assets in New York. But like two last questions is, and it's gonna be quick answers, whatever is easiest.
Okay.
Twitter's rebrand to X. Do you like it?
I do myself. I've taken to it. It's kind of cool. It's like Elon cool.
Okay. All right. And then the last one is DraftKings is also one of your top holdings. Do you think DraftKings faces a serious threat from the Penn ESPN bet sportsbook combination?
You know, I don't think so. We're watching this. We will be watching the share gains carefully, but we're very impressed with what DraftKings has done over the last couple of years. Faced a lot of competition, pulled away from advertising, and started just getting more creative. And even to the point where they're bringing NFTs into the ecosystem, and have gained share. So our analyst Nick Roos thinks DraftKings is in the pole position here, along with FanDuel, of course.
No, that is awesome. I want to thank Cathie Wood, ARK Invest. Follow them on Twitter, read their white papers. It's easy to read people that say negative stuff, but what they do is research and they put it to the public. I mean, they tell you what they do. I don't think in our time in history, besides Warren Buffett, where he gave those annual letters and you had those Q&A sessions where you had someone that's so transparent. And honestly, like, I don't know how you do it. Like, you go to Twitter, if you read the ads, some people love you, some people don't. I don't know if you read the ads. I don't know how you do it. And you just march to your drummer, and your research thus far. I mean, look at the gains you had in Nvidia, Tesla, and a couple other you mentioned, genomic space. It's unbelievable. We appreciate you coming on the Benzinga Raz Report. We're here for the people, by the people. We have 30 million readers a month. And one of the biggest demands was to get you on, because we're here for the people, by the people, to hear the answers. That is not a 2-minute time segment. It's a little bit longer, and let you, provide your research in an oral format. So really appreciate you coming on again, Cathie Wood. Thanks again.
Thank you so much, Jason. And yes, the truth will win out. That's my response to the Twitter haters. So
the truth will win. The truth will. So you don't look at the Twitter haters.
No. I don't have time to do that. But I also know our research. The depth of our research is going to get us to the right answer before it's going to get others to the right answer. No one's doing the research the way we're doing it, starting with Wright's Law. And we truly do believe that truth will win out for the people.
And you've so far proven that out. The last question is, are you ordering a Cybertruck?
You know what? I'll tell you why I haven't, although I might still. My very first car was a Mustang, and I love Mustangs. And before we got into electric vehicles, I said, I got to get another Mustang before. And then I said, is that trying too hard? I have a Model 3 and a Model Y. And yet I do think the Cybertruck will expand the market to people like me. I don't need to haul anything. But I'm hearing about a lot of my friends, mostly guy friends, who are for the first time in their lives buying a truck, and they don't need a truck. So, I think it's going to expand the market.
Oh yeah. I never wanted a truck. When I get in line or what have you, I'm getting that truck. Again, thank you, Cathie Wood, ARK Invest, for coming on.
Congratulations on all your success. Thank you so much.